This is the Asia Trade. I'm Avril Hong in Singapore.
And I'm Paul Allen in Sydney. The top stories this hour.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back.
Treasury Secretary Scott Bessent fueling market expectations for Fed easing, telling Bloomberg it's time for a series of cuts, starting with 50 basis points next month. President Trump warning Vladimir Putin of severe consequences if he doesn't agree to a Ukraine ceasefire as they prepare to meet in Alaska. Also ahead, Apple jumps as Bloomberg reveals its AI comeback plan will hinge on new devices, including robots and a lifelike Siri. And we get views from the C-suite, speaking live to the Asics COO and president, as well as GoTo Group's CFO.
Let's get to today's agenda, Paul, because it's really the focus on the comments from the Treasury Secretary, Scott Bessent, making his most explicit call yet for the Fed to start a cycle of rate cuts, saying that they should be, these rates, 150 basis points at least lower from where they are now, calling as well for a 50 basis point cut in September. And it's worth noting that the Fed has left rates unchanged for all of this year. Scott Bessent suggesting that if the central bank had known about these weak payrolls, remember we recorded that a couple of weeks ago, and then the downward revisions, that they would actually have cut at the last meeting. Take a listen.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board.
There was a very wide-ranging interview with Scott Bessent. He also weighed in with a number of views on China, and also, he's untroubled by this idea, Avril, that China's not interested in taking Nvidia's H20 chips, or it's discouraging its tech companies from doing so, saying, well, look, China's obviously worried about those becoming the standard. He also spoke about the recent agreement to allow Nvidia and AMD to sell lower-end AI chips to China in exchange, of course, for 15% of related revenue. And Scott Bessent suggesting that could be a model for future deals in other industries. Let's take a listen.
This is a very unique solution, allows Nvidia to expand into China. It can make Nvidia chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to Nvidia and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
Let's take a look at the setup for Asia Trade today, because it's really about these Fed rate cut bets, and now 25 basis point pretty much fully priced in, which is quite something given how about 2 weeks ago we were roughly 50-50. U.S. stocks didn't quite need this given how they were already at these record highs, right? But this is certainly fueling even more risk appetite at the time of easing trade tensions. Looking at Sydney futures, remember yesterday Australia was the laggard in APEC markets, pointing to some upside, and Nikkei futures pointing to a little bit of softness at the start of trade. We also saw the dollar moves overnight, Paul, that weakness that we're seeing in the greenback against the backdrop of the move in the yields, Paul.
Yeah, it was a really good day for U.S. markets again. All the major indexes were higher, and we're seeing futures pointing a little bit higher as well, although just dipping into, slightly softer territory there. But it is, as you say, a situation where we're seeing traders just snapping up risk assets on expectation of Fed easing. We've also seen bonds rally, traders betting that there is going to be a cut at the next meeting next month. Note of caution, though, from a couple of Fed speakers. We did hear from Austin Goolsbee saying, yes, the meetings are live, but the data's still mixed. Goolsbee saying he's uneasy about viewing tariffs as a one-time shock. We also heard from Raphael Bostic saying one cut this year is appropriate, Avril.
Yeah, so it makes you wonder, To what extent is this September cut a done deal? Let's bring in our executive editor for Asia Markets, Paul Dobson. So, Paul, what do you think? The Fed is under a lot of pressure here, especially given the comments from Bessent.
Yeah, well, I think listen to the Fed policy speakers. Don't listen to Bessent. You know, he's got that political angle, but he's not part of the rate-setting committee. It's up to the people on that panel to decide. And not all of them are completely convinced still in what we're hearing, but it does certainly feel that there's a big momentum shift after we had the payrolls data and then this inflation number, which seems to give that green light for the Fed to start cutting in September. And the market is priced in, as you said, a full cut and maybe even a little bit more of an aggressive cut in September. And then over the course of it, a cycle that could take us all the way down to sort of 3% for the Fed by the end of next year. So, you know, people are looking for that and taking heart from the idea that that's going to be very supportive for the equity markets, the economy, and it's going to weigh on the dollar as well.
Your traders seem to have made up their minds, and it's risk on for pretty much any asset you can think of. Are we seeing any signs of irrational exuberance in this market, though?
I mean, I think actually a little bit of the opposite is what we saw in markets overnight, Paul, where the S&P 500 rally broadened. So we had more than 400 of the 500 companies in the index rising, and the big tech companies, which have been leading the charge, and obviously the index looks very top-heavy, didn't perform as strongly as the rest of the market. So the idea that the gains are broadening out, small caps as well, up 2% on the Russell index overnight, is a sign in some ways that people are a little bit more confident about the fact that we're going to have a very strong economy, right? We're going to have, if we have the Fed cutting rates, we have very stimulative fiscal policy at the same time. We have the revenue coming in from the tariffs. Everybody seems to think that that's going to be okay, at least in the short run. They're going to run the economy hot, and that's what the market is starting to price in. So I don't think irrational exuberance, I think rational exuberance might be what we're looking at right at this moment in time. However, you know, how long they can keep the economy going kind of like at full pelt before everything starts to catch up a little bit, that will be the longer term risk that the market will worry about. Maybe not today, maybe not tomorrow, but over the rest of the course of the Trump regime.
Yeah, and remarkably, volatility has come down as well. But I guess, you know, to pick up on Paul's point and what you've just mentioned, is the market underpricing what could come a couple of quarters from now, or maybe towards the end of the year?
Yeah, so I think we still need to see exactly what the longer-term impacts of the tariffs are going to be and how that's going to change things over time. Some of the inflation feed-through will take a long time. You know, the Christmas goods imports are probably already done, but then next year, the things that are coming in now that are going to be subject to those tariffs, we're going to continue to see that being marked up. And is the rest of the world going to start to hurt as a result of it as well, and will that slow us down? So those are the things that sort of down the line where there might be more of a catch-up. But in the flip side of that, if you've got the Fed cutting rates at the same time, you know, that gives everything else a boost. The rest of the world's central banks can be a little bit easier, you know, loosen the collar a little bit, cut interest rates as well, and that can support markets all around the world and not just in the US. So there are reasons to be optimistic, even though there are still obviously a lot of risks hanging around in the background.
All right, Executive Editor for Asia Markets, Paul Dobson there. Well, President Trump has warned that Russia will face consequences if Vladimir Putin does not agree to a ceasefire with Ukraine in the coming days.
Yes, they will. Yeah.
What will the consequences
there will be
be?
consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
Well, the warning came after Trump spoke with European leaders ahead of his Friday summit with Putin. Bloomberg's Michael Heath has been following this for us. So, Michael, raises a couple of questions here, doesn't it? What could be severe consequences, and what's Vladimir Putin likely to put on the table to avoid them?
Yeah, Paul, I mean, look, the president's saying all the right things, and what sort of came out of this conference with Europe is what you'd sort of want to see ahead of this meeting. I guess the consequence we're talking about, we've sort of seen early signs with India, and that is that they start penalising the buyers of Russian oil, and they try and shut down that or curtail that trade, which is sort of, you know, the lifeblood of the economy, and start to put a squeeze on Russia's elite, and particularly, you know, in Russia, basically everything relies on Moscow. So as long as people in Moscow are living well and everything's comfortable there, that's where change happens in Russia politically. So the aim is to try and put some economic pressure on Russia. Nothing nothing will happen, particularly militarily, I think, but that would be the goal. I mean, in general, it's very good that Europe got to President Trump. We often see him sort of reflecting the last person he spoke to, and those leaders having made clear that he shouldn't be giving away any land or making any deals above Ukraine. I think it was a fairly important thing to get across.
Mike, what's your sense of whether we could see a meeting, not just with Trump, Putin, but including the Ukrainian leader?
Yeah, Avril, I mean, that was sort of the outcome of this conference call between the US president and Europe's leaders. That and President Trump said this, that his aim is for there to be a follow-up meeting. That this first one would, the goal is to try to get a ceasefire there, but the aim would be to try to get a second meeting as quickly as possible with Volodymyr Zelensky there as well. Now, this really all comes down to what is Vladimir Putin's calculus here. Can he withstand? Can he withstand, extra US pressure? Does he assess that that President Trump is bluffing? I mean, these sanctions and threats on Russia have been coming, since the start of the year, and there's been no action, with 2/3 of the way through the year. So, it's really up to his calculus. Now, if he thinks that they are serious, then perhaps he does agree to a ceasefire. And we know that in past times Russia sort of dragged out negotiations and tried to sort of change the situation on the ground. So it really comes down to his assessment. I mean, Putin's not a particularly skilled negotiator or 3D chess player or whatever you like to call about it. I mean, people often hark back to his KGB background, but he's a very low-level official. He wasn't a significant person there. It's sort of a brand, and it's good for him, but he hasn't proven to himself to be particularly skillful there. He just generally waits for the West to sort of end up dividing and then comes in to see what he can get out of it. So it really is about the unity of what he faces.
All right, Bloomberg's Michael Heath there. And subscribers can read more about how the Ukraine war is exposing cracks in Russia's economy in today's Big Take. That is available on the Bloomberg terminal, also on Bloomberg.com. Avril.
Yeah, in the meantime, here are some of the stories we're following. A U.S. appeals court says the Trump administration can block billions of dollars in foreign aid already approved by Congress for distribution. It's a win for Trump's push to withhold USAID funds and dissolve the agency. Separately, a Maryland federal judge has rejected the Trump administration's attempt to throw out a lawsuit that accuses Elon Musk of unlawfully directing the closure of USAID. China has sanctioned 2 EU banks for fulfilling a promise to retaliate after the bloc targeted some Chinese lenders over Russia's invasion of Ukraine. It's a largely symbolic move, as both Lithuanian banks say they have no operations in China. The Ministry of Commerce says it hopes the EU will correct its wrongdoing and stop harming China's interests. A Chinese company is suing Applied Materials, accusing the U.S. chip equipment supplier of stealing trade secrets. Beijing E-Town Semiconductor filed the suit in a Chinese intellectual property court, alleging Applied Materials poached 2 staff with knowledge of proprietary plasma technology and later filed a related patent. E-Town is seeking around $14 million compensation.
Coming up on the Asia Trade, we're going to talk with the COO and president of Japanese sportswear maker Asics as its shares and earnings outlook hit record highs. Also an exclusive with GoTo Group CFO Hon Hai as it bets on all its major business units becoming profitable by year end. Much more ahead. This is Bloomberg. The Trump administration launched a multi-pronged attack on China's economy with tariffs on Chinese goods, restrictions on technology transfer, and curbs also on student visas. However, Bloomberg Economics thinks Beijing's been preparing for this fight for decades by focusing on modernization and industrialization. For more, here's our senior editor, Derek Wallbank. So, Derek, China obviously been planning for these realities. How well positioned is the country to fight this trade war?
Well, Paul, let me start with a basic figure. If you go about 20 years back, China's exports to the United States are talking about 7% of GDP. Now you're down to about 3%, right? China's not nearly as reliant on the U.S. as once they were. And the finding that our folks came to is basically pretty simple. It's that China's in a better position than maybe the United States thinks that it is. Now, for sure, this is something, you talk about the sanctions package and tariffs and all of these other things that may be made to try and constrict in all of the ways that it could constrict and try and move with an economic, kind of incentive. Yes, there are implications there. There are not small implications. They have very real consequences. But are they exactly the lever that they maybe once were? Maybe not. And that is something that we're seeing play out here in the context of, Donald Trump's engagement with China. Remember the first Trump term that he came, where he sort of first launched that trade war with washing machines and solar cells and things of that nature. It was a little bit more. It ratcheted up quite heavily. It became a whole sort of thing. This one has not necessarily gone all that way. There was the initial flurry of tariffs and counter tariffs and retaliation and all of that, and then we get to a truce, and that truce has mostly held here. Along the way, we found sort of two things. Even if China is not going to emerge unscathed from U.S. tariff actions, it does have a certain amount of resilience, right? One. Two, China also has an ability to have leverage over the United States. And we've seen this most particularly with rare earths, but we've also seen China try and flex its muscles in other ways. I'm thinking about, companies that export into China, Boeing being very high among those, right? So there is a lot of interconnectedness there. And far from China simply being a country that the United States can say, look, here's what we want you to do. And if you don't do this, we're going to do all of these sorts of things. China has cards to play as well at the table.
Derek, just wondering, how much pressure do you think Europe might start exerting on China? I mean, we have the likes of Bessent warning that Europe should put up or shut up, and I'm quoting this, it's put up or shut up time on Russia, pretty much getting them to toe the line, potentially raise tariffs on China in relation to their imports of Russian energy.
It's a really good question. I think one of the things that European leaders can say right back to the United States is, cool, you first, right? If you're talking about Russia pressures, we've seen them on India in terms of secondary tariffs or retaliatory tariffs, or however you want to call that, for buying Russian oil. But we haven't seen the United States want to move against China in an equivalent way. There has been thought, some of my sources in New Delhi and Mumbai have told me that the impression that they've gotten is that China is too big to bully, which is quite a remarkable phrase from a country that has been at the center of U.S. diplomatic engagement goals in the Indo-Pacific, for now more than a decade. So that is a really sort of interesting kind of play, because the U.S. has held off on, ratcheting up pressure on China, and China is, if anything, the biggest sort of if we might say facilitator or sort of a backer of Russia on the world stage. It's hard to see how the Russian economy would be going anywhere near where it is were it not China involved. But all of that is sort of, we're waiting to see how that goes with the meeting in Alaska on Friday, as well as the potential future Trump-Xi Jinping summit.
Yeah, that could be a couple of months from now. Derek, great to chat. Thanks so much. Bloomberg senior editor Derek Wallbank. Meanwhile, the Treasury Secretary says it was President Trump's unique idea to allow Nvidia and AMD to resume lower-end chip sales to China while paying a 15% cut to the U.S. He told us the deal could also serve as a model for others in the future.
the president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And I think that this is a very unique solution. Allows Nvidia to expand into China. It can make Nvidia chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to Nvidia and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think right now this is unique, but now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. Right, so we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H20 and use our domestic champions. Is this something you might discuss with your counterpart?
Oh, sure, we can discuss that, but it also tells me that they are worried about the Nvidia chips becoming the standard in China. Look, Nvidia is an incredible product. A lot of the technology in China is, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the Nvidia, Jensen Huang just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the Oval.
No, not at all. Because where we got was with this unfettered trade, we did not have secure trade or fair trade, and so now we are trying to make it secure. So you don't want to. We're not sending out the highest level chips, and we don't want to sell everything to everybody. So there is a need for intervention.
U.S. Treasury Secretary Scott Bessent speaking there to Bloomberg's Jonathan Ferro and Anne-Marie Jourdain. We have more ahead on the Asia trade. This is Bloomberg.
We're seeing a lot of appetite for risk in the past session. Certainly that's helping to fuel crypto as well. You're looking at Bitcoin hitting a record and Ether almost there. And this is against the backdrop of these Fed rate cut bets, trade tensions easing, further fuel for riskier assets, more or less moving in lockstep with US stocks that hit record highs. But to be clear, Bitcoin has been more or less climbing in the past year against the backdrop of expectations of a positive U.S. legislative climate under Trump. You're watching the Asia Trade.
The Japanese have an inflation problem. I've spoken to Governor Ueda. My opinion, not his, they're behind the curve, so they're going to be hiking, and they need to get their inflation problem under control.
U.S. Treasury Secretary Scott Bessent, and it's worth noting as well, against the backdrop of Bessent saying that he's spoken to the BOJ Governor Kazuo Ueda. We did see just a day ago that demand for 5-year JGBs was really weak, the weakest demand ratio since 2020, and certainly something we're going to be watching in the session. Although bond futures are pointing to some upside, might be tracking what we're seeing in Treasuries, dollar yen hovering at that 147 level, maybe some downside when it comes to Japan Japanese stocks. Now, among the shares we're going to be continuing to track include Japanese sportswear maker Asics, which jumped 18% on Wednesday to an all-time high after the company raised its full-year forecast. It's now predicting record earnings and bringing forward midterm targets by a year. Asics says earnings will rise faster than previously expected as it sees reduced uncertainty around U.S. tariffs. Joining us now from Tokyo is President and COO Mitsuyuki Tominaga. Mitsuyuki-san, very nice to see you today. First off, congratulations. Maybe start by talking to us about what helped the strength in the most recent quarter.
Yes, good morning, Avril, and thank you for having me, and thank you for the opportunity. I just want to tell that we are very, very happy with the second quarter results that we just announced. Maybe if I could point 3 points. First of all, we are in the business for 75 years out of Kobe, Japan, and we had the best quarter ever in the second quarter, both sales and operating income. And secondly, with the very strong first half, we have decided to uplift our annual guidance, and we will be looking at 800 billion Japanese yen on sales, 130 billion operating income, which is approximately 20% increase in sales and 30% above increase in operating income. And also the operating income percentage, now at 17%, is one of the highest in the industry. So we are all proud of the results and very happy that we are able to achieve this 1 year ahead of our financial plan. And thirdly, after an announcement, the stock market was well accepted our results, and as a result, for the first time, we hit 3 trillion yen in market capitalization.
Yeah, it was really positively received by markets, as you allude to. Talk to us, though, about the risks from U.S. tariffs, because I think you lowered it from 5 trillion yen, the expected impact, to 3 trillion yen. What is the expectation for the North American operations?
Sure. Thank you very much for the question. And basically, a little bit of background. So basically, we 20% of our revenue come from the U.S. operation. And where we develop these shoes is mostly in Indonesia and Vietnam. So the tariff was originally based around 20%. And with the new tariff, it was increased to by 19 and 20% accordingly. We have decided not to increase our price due to tariff for this year, because it is very important that we have been working strategically with the wholesalers, especially the running specialty stores. But with a very strong demand in the U.S. sales, we are all, with the tariff and the cost structure, we are able to maintain the financial plan that we may have for the U.S. operations.
So, Mitsuyuki, you're willing to absorb some of the impact of tariffs for this fiscal year. But what about future quarters? Because the Trump administration is going to be in office for another 3 years. What's the plan going forward?
Yes, obviously, it is a big concern for us. But once again, we will not increase price for even first half of 26, but we will adjust costs accordingly towards the end of the year for next year.
So how are you looking to trim costs elsewhere?
Well, I'm not that concerned on the cost. One of the things that we're very proud of is our product is we're very well accepted in the market right now. Our technology, the craftsmanship, the Japan heritage is now very accepted with the market, and we work very closely with our athletes, especially on running, tennis, volleyball, and so forth. And we are also replicating this technology into new areas of lifestyle and fashion, which is something like Onizuka Tiger. And this area has been growing at 50% at this moment. At the same time, globalization is also a big, important key driver for us. 80% of our sales come from outside of Japan. And so Europe, China, Japan, US is a big market. But also we have been investing heavily in India, Southeast Asia, Middle East, and South America. And these countries are growing even faster pace than their major market. And the third area that we're investing is in digital and also D2C. We have been investing on running application, the race registration. So we have a lot more touch point than before. And by doing this, we really understand the consumer a lot more, when they're buying, who's buying, and what kind of event trigger the purchase. So with all this, I'm very confident that we have a lot of areas that we could grow further besides the tariff.
Mitsuyuki, would you be able to put some numbers on the expectations of growth and some of these markets you've just spoken about, including India? What sort of pace are we looking at here?
On average, we are looking at 20% growth going forward for 26 as well. As I said, we made a midterm plan in 24, from 24, 25, 26, and we achieved the financial plan this year. So we will have a new target for 26, and we also plan to have a new midterm plan developed next year, and we expect to have 15 to 20% growth in sales going forward.
You talk about how you're not too worried about costs. I wonder, to kind of stay ahead of the competition, how much expenditure is expected over the next couple of quarters in product innovation?
Product innovation, so we have obviously innovation, research is a very important part of our portfolio, and approximately 2% is done in the research side on ISS, Institute of Sports Science. But we plan to do globalization in this area as well, having research centers in Europe and United States, and especially working with the top athletes is some of the key for innovation, because this is not just for core sports, but also for lifestyle and Onizuka Tiger that will be developed with the technical shoes in the lifestyle environment as well.
Yeah, to that point, which sports do you see presenting the greatest potential for Asics at the moment?
I see both potential in core sports and also lifestyle. The core sports, obviously running is getting very big, it's getting very popular, and our market share is growing in every race that we participate in. Tennis is also very important. We had #1 market share in Wimbledon men's singles, and we continue to do that for the rest of the tournaments. So these areas are growing. But not even tennis. There's a lot of things like padel and pickle that's coming up. That's our opportunity. We're looking at younger opportunities in like skateboarding and so forth. At the same time, the market I just said on lifestyle and fashion with Onizuka Tiger and sports style is we are still probably 2 to 3% of the market share. So there's a huge opportunity for us to grow both on a global and also in a scale.
All right, Mitsuyuki, great to get you on to share some of your plans for the company with us. Thank you so much, Mitsuyuki Tominaga, President and
Thank
CEO
you very much for
at
having me.
Asics. Now, let's take a look at how markets are faring as well, particularly bonds globally after the rally in treasuries overnight, with markets pretty much pricing in fully this 25 basis point cut from the Fed. And not only that, we're also seeing parts of the market pricing in increasingly a 50 basis point reduction from the U.S. Central Bank at its next meeting. It's worth noting that just a couple of weeks ago, this was prior to the weak payrolls number, that it was quite a different narrative. I think markets had less than 50% of a cut priced in for the month of September. So certainly that is something we're watching in the session. For now, we're expecting further upside, whether you're talking treasuries or bonds in the G10s. We'll be keeping a close watch in Japan as well. This is coming, of course, against the backdrop of that weak 5-year bond auction just a day ago. Paul?
Well, coming up next, exclusive details on Apple's artificial intelligence comeback push. We'll have more on their plans for robots, new devices, and a lifelike Siri. That's up next. This is Bloomberg.
Apple is reportedly planning a major comeback in AI with new devices in the works, including robots, a lifelike Siri, a smart speaker with a display and home security cameras. For more on this Bloomberg scoop, let's bring in Mark Gurman, managing editor covering Apple and consumer tech. Mark, it's quite a fleet of products if this is indeed what Apple is gunning for. Tell us more about this and how this is going to potentially mean an AI comeback for the tech giant.
Yeah, the goal is to really push a ton of new AI-driven devices into the market. There's the tabletop robot, the potential of a mobile robot. There's been loose discussions about a humanoid robot. There's a new lifelike version of Siri. There's a redesigned version of Siri. There's a smart home display, basically a home pod with a screen. Coming next year, the robot, the tabletop robot, has a similar design, but with that robotic arm that can float in your space. That's going to come out in 2027 in all likelihood. Then there's also a push into the home security market, a new home security ecosystem, as well as home security cameras. So this is a lot of stuff. And Apple's doing what it's always done. It's trying to blend a new type of technology with hardware. Obviously, it's a hardware company. It's a product-driven company. And so that's why they're pushing very much in this direction, whereas you see some of the other companies really focusing on the software side of AI.
Mark, the last big product to come out of Apple was the Vision Pro, and it was somewhat of a miss. Now, how much is riding on these new products? How badly does Apple need a big win here?
Yeah, the original Vision Pro is a huge miss. Apple needs to keep churning out new devices that people are going to buy if they're going to create growth. The iPhone is still selling absolutely blockbuster numbers. But they need to augment that. And the way to grow and augment that is these other devices. And the Apple Watch and AirPods, they've really tapered out over the past couple of years or so in terms of functionality and refreshes, as well as in sales in many respects. Vision Pro didn't do much to help. The other product sales, they're really leaning on a combination of the iPhone and services. So to get things moving, you're going to have to start adding a lot of stuff. And you've got a slimmer iPhone coming. You've got a foldable iPhone coming. You've got a convertible Mac iPad foldable coming. You've got the tabletop robot coming. You've got the smart home display coming. You've got home cameras coming. And so you're seeing these little businesses that they're hoping are going to sprout into something much bigger down the road.
All right, Bloomberg managing editor covering Apple and consumer tech, Mark Gurman. Well, Tencent reported a 15% revenue jump in the last quarter, driven by double-digit growth in most major business segments, including advertising, which it attributed to AI-driven enhancements. Let's get to our China correspondent, Minmin Lo now. So, Minmin, a solid set of numbers there from Tencent. What were the key takeaways and highlights?
Yeah, it was a very strong quarter for Tencent. As you said, the revenue came in at 15%, which is 3% higher than estimates. Net income as well came in at 17%, also beating estimates. And we saw this improved margins across all segments. Thanks to the AI integration, we are seeing better performance in ad sales because of better targeting and click-through rates. And when it comes to gaming as well, even the existing games are seeing pretty significant increases in the number of new users. And of course, investors were particularly focused on the AI spending for Tencent. It was up 150% in the second quarter, but the company says it's going to be quite cautious about stepping up spending, suggesting that they are going to be quite modest compared to some of their international peers. The president of Tencent saying that they're not going to hire aggressively or pump in a huge amount of marketing into AI, given that there is still a lot of unrealized potential for AI at this point. We know so far that WeChat has always been, Tencent rather, has been focusing more on integrating AI into its existing suite of services instead of coming up with new platforms. So it still wants its WeChat super app to eventually be a host to other sort of AI agent tools. It's also been rolling out AI services to game designers so that they can use it to come up with in-game avatars and assets. So overall, given the backdrop of tariffs and geopolitical headwinds and economic slowdown, I think the earnings really show that Tencent is going in the right direction, and you can see it was up 8% overnight in the US. We can expect a pretty strong opening today when markets open in China.
Min, what about JD earnings? What are investors keeping watch on? Might it tell us more about profit trends in the Chinese market?
Yes, JD.com is expected to see its profit take a big hit because it's made its foray into the food delivery platforms, right? It's a space that is dominated by Meituan and Ele.me, and we all know there has been this very, very intense competition in that space, a lot of money being pumped into promotion, so all of that investment into this new initiative is likely to have taken a hit to its profits, which is expected, earnings per share expected to be down by 50%. For the first time in about 3 years. But we have also the government trade-in program that's going on that is supposed to have helped lift its retail sales revenue, and the improved margins there could provide a bit of a support. But our Bloomberg intelligence analysts expect the profit hit to continue to extend till the end of the year because the company JD.com is expected to continue those expenditures, the costs incurred into overseas expansion, as well as its investments into supply chain related costs like building out centralized kitchens, for example.
Min, thank you so much. Bloomberg's China correspondent Min Lo. Other key results due today include CK Hutchison's first half earnings. Though port deal setbacks may steal the spotlight, Geely is expected to report a first half revenue jump of up to 40%, driven by strong deliveries of its Galaxy brand. And Foxconn's results are also due, with Bloomberg Intelligence projecting Hon Hai's second quarter sales may be up as much as 16%. More ahead on the Asia trade. This is Bloomberg. In a year when traditional luxury brands are struggling to attract buyers in China, one notable exception has emerged. Laopu Gold is a homegrown retailer that surged in popularity thanks to its culturally rich designs and high-purity gold products. China correspondent Min Lo explores the strategic moves fueling Laopu's success.
China's growth looks set to decelerate in the second half of the year after a resilient first half. As export front-loading fades and retail sales remain stuck at mid-single digits, showing little sign of immediate recovery in non-subsidized sectors. But in this downturn, gold has surged, and along with it, pure gold jewelers like Laopu.
Bain & Co. estimates that China's luxury market sales last year had plunged by 20%. But Laopu Gold bucks the trend because gold jewelry is not just a symbol of prestige, it's also a hedge amid falling property prices and volatile financial markets.
Walk into a luxury mall in China and you might find a long queue of people waiting to enter its stores. Since its IPO in June last year, the share prices have soared 1,800%.
I am born and raised in China, right? When I think of a piece of gold jewelry, usually I associate that with something my parents or even grandparents' generation would wear.
Gold jewelry, once seen as old-fashioned by some, is making a comeback driven by Laopu, which has flipped the script by embracing heritage gold, hand-engraved heirlooms using ancient goldsmithing techniques once worn by emperors and nobility.
The overall trend of embracing this cultural heritage or Chinese aesthetics inspired products, I don't think all of that is just a fad. It's definitely a sustainable trend.
This has helped the firm attract a younger audience. Moonfox data says more than a third of its buyers are aged 26 to 35. Laopu has become one of the three sisters of new consumption, alongside breakout stars Pop Mart and Mixue. With the government boosting domestic demand through subsidies, analysts say non-subsidized sectors can still find growth with premium offerings, localized branding, and improved customer experiences. Exactly the strategy that Laopu is following.
They try to plant or combine or embed their own kind of cultural component into their design. And that is why we actually think Laopu has actually the highest potential to be the first legit Chinese high-end luxury brand.
Despite the share prices rallying triple digits this year, investors are still bullish, with a 12-month price target 30% above the current trading price. The true test, though, is whether Laopu can still shine when the gold rally fades.
Laopu is also trying to decouple the relationship between gold price and its own product price. So I think ultimately what it wants to achieve is that consumer is not paying for Laopu because they want to buy the pure gold. People want to pay for Laopu's price premium because they want to pay the brand premium.
For now, analysts say demand for gold is giving Chinese jewelers such as Laopu and Chow Tai Fook a leg up over foreign rivals including Cartier and Tiffany. And brands tapping into the demand for culturally rich premium products could be the gainers in China's consumption space. Min Min Lo, Bloomberg News, Hong Kong.
Well, let's take a look at the gold price. Well, it is off record highs, but not by much. 3,362 an ounce at the moment. Gold up about 25%, a bit better than that on year. I've got to tell you this remark from Saxo Bank's Ollie Hansen regards gold. He says, with stagflation risks and a rate-cutting puppet hitting the Fed chair sooner or later, the trajectory higher for gold, so maybe a bit more upside there for the precious metal. Let's take a look at some of the stocks to watch in the meantime when trade opens in Australia, Korea and Japan in just a couple of minutes. Track shares of these Australian companies which reported earnings pre-market today. Westpac's profit edging up in the third quarter on business and institutional loan growth. We also heard from Telstra as well, reporting net income up 34%. That was a narrow miss, however. Avril.
Yeah, and given how there was a bit of downside yesterday, indeed, those are the stocks we're going to be watching. Also coming down, the rain in Hong Kong, and the Hong Kong Observatory has also posted a black rain warning. We'll be watching the markets open in Sydney, Seoul and Tokyo next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And Paul, we've been focused on the comments from the Treasury Secretary Scott Bessent about how the Fed should be starting this rate-cutting cycle. 150 basis points lower from where we are now is what he's calling for.
That's right. Of course, big difference between what the politicians would like to see and what the Fed might deliver, though. We did get a reality check from Austin Goolsbee and Raphael Bostic, both saying, well, let's be a bit careful. Still not completely sure if tariffs have been a one-time shock, but certainly the market's pricing and easing at the next meeting, Avril.
Yeah, they're pricing in fully that 25 basis points. Bessent also talked about how it should be 50 at the next meeting, and that has provided further fuel for U.S. stocks and risk appetite in general. But it's interesting, even though we're seeing EM particular running ahead, which we'll get to in just a bit, there is a bit of downside in the session today on the Nikkei, but this is after already a pretty strong showing in Japan this week. A couple of things we're also watching out for out of Japan, including a day ago. Remember that weak demand ratio on the 5-year bond auction, and this is against the backdrop of markets really contending with weak demand at the time when the BOJ is engaging in quantitative tightening. We also had Bessent weighing in, saying Japan needs to sort of get inflation under control, saying that there has been a trickle-through effect on Japan yields to elsewhere. So that's something that we're watching as well. For now, seeing it flat on the 10-year yield in the country against the backdrop of the dollar sliding. We're seeing that firmness on the yen at the 147 handle. Take a look at how we're faring in South Korea, because there was a tech undercurrent overnight, and indeed we've been seeing that for much of this week. It's also looking pretty soft in South Korea. Kosdaq is actually pointing lower at the moment, and of course we'll be watching the EM stocks, EM currencies as well in the session today, Paul.
Well, let's take a look at how we're tracking in Australia. Also just open for trade, and we're a little bit higher at the moment to the tune of 0.5%. And we did have a couple of big stocks reporting today as well. We are getting into thick of earnings season in Australia now. Westpac, one of the big four banks, as they're known here in Australia, reporting third quarter profit up 5.6% to 1.2 billion. That stock moving higher at the moment by about 4.7%. We also heard from Telstra, the big telecommunications company. They're off about 1.8% right now after net income came in with a narrow miss, but Telstra announcing an additional share buyback of up to 1 billion. So mixed fortunes for those two stocks. We've got the Aussie dollar appreciating just a little now, 65.5 cents. So this is after we did see easing from the Reserve Bank, but perhaps a story of US dollar weakness there as markets become more and more convinced that we are going to see a cut at the next meeting. That now fully priced. No change to the yield on the 2-year, which is sensitive to policy decisions. We have heard from a couple of Fed speakers, Austin Goolsbee saying meetings are now live, but the data's still mixed. He's uneasy about viewing tariffs as a one-time shock. Raphael Bostic, meanwhile, just saying one cut this year is appropriate. And that's somewhat at odds with what we've heard from the US Treasury Secretary Scott Bessent, who is urging the Fed to get moving with a 50 basis point cut at the next meeting as a prelude to a longer easing cycle. Let's have a listen to what he had to say.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board.
Well, joining us now is Katy, Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. Katy, we just heard from the Treasury Secretary there calling for 150 basis points worth of easing. I mean, I'm sure markets would welcome that, but do you think there's any risk inherent with cutting that heavily?
I mean, there's definitely risk inherent with aggressive cuts. I think what we've seen is that the market is sort of embracing this idea that we're definitely going to have an easier Fed. I think 150 basis points would have a much bigger impact on sort of overall concerns about inflation. So my guess is that it's going to happen more slowly than something like that. But it definitely is a headline interesting number. And you've seen markets moving as a function of their increased conviction, especially post the CPI number this week, that tariffs have not so far induced inflation to a point where we would see concerns. Thus, they're seeing it as a green light for some cuts in the short term.
Yeah, we've seen the US dollar weakening against the entire G10 basket of currencies off the back of some of this rhetoric that we've been seeing. And markets now fully pricing in, well, at least 25 basis points. But how's that informing your attitude towards emerging market stocks? Because we have a chart here on the Bloomberg terminal indicating that, well, they could be in for a boost. Is this something you're looking at?
Yes. I mean, I think it's one of the biggest trends we've been following recently is just taking a look at where Japan has gone, EM. I think India is the outlier there. But really, you've seen a tremendous boost in Asia markets. And that's something that is so both indicative of risk on, but it also may be a function of being past some of the peak tariff uncertainty. So it's doubly motivated by both people sort of having better sentiment, but it's also a risk-on theme that's perhaps percolating into Asia from the U.S. as well as sort of a general positive themes across markets, particularly in Asia.
How positive or constructive are you that the markets in the U.S. continue broadening out? Because we've been seeing it benefiting small caps as well more recently.
Yes, this is a really good point. And what we actually have thought about to some degree is that if you do see rate cuts, that's tending to be more favorable for domestic companies. So you've seen that in the data that the Russell has really done well in the recent period, particularly on the heels of a sort of shift in mindset that we might actually have lower rates at some point in the future. There's also a general theme that in a risk-on environment, people are looking for diversification. They're looking for untapped sources of potential return. And many people have been very concentrated in this AI tech theme. So I think it might be an opportunity for small caps going forward based on those two factors.
You talk about how people have been so concentrated in the AI theme. Of course, we've been watching Nvidia, AMD, these developments about how they might be sharing their revenues with the US Treasury at some point. What is your sense of how this potentially affects profitability?
I mean, that's going to be a question of how it actually ends up being implemented. But of course, that's something to be a concern in terms of, in general for those companies. But I think in general, the profitability of these companies are still very strong. Investor interest continues to be strong, and potential is still sort of perceived as there. So I think you're seeing that. A perfect example is if you look at the NASDAQ, is really rallied recently as well, as long as the Russell, much farther ahead of the Dow or the S&P. So you kind of see that people still have a lot of belief that there's still room for profitability, even with those costs.
Does this raise another question, though, in terms of, political overreach into corporate decision-making? And I'm not just talking about that Nvidia-AMD deal, but also, the Intel CEO, Lip-Bu Tan, being called in to meet the president over perceived conflicts of interest, or President Trump telling CEO of Goldman Sachs, David Solomon, to stop being a bank CEO and get back to DJing. When you see this kind of thing, does it make you concerned at all about political influence in corporate decisions?
I think everybody is concerned about political influence on corporate decisions. The question is just what are the ramifications of that? And right now, what we've really seen is just creating a lot of noise. So it's adding volatility to asset prices. And I think that's where it's going to be tricky for investors to navigate, how much of this is real and how much of this changes actual corporate actions and asset prices. And I think that has sort of been a constant theme that we've seen since this change in administration.
Yeah, well, none of it seems to be making anybody risk-averse, though. We've got broad-based rallies across most major assets and most major markets as well. Can you see this rally continuing, or is there anything out there that thinks, well, maybe there could be a correction?
Well, this is a good point. There definitely is a lot of momentum in equity markets right now. I think the places investors need to be being a little more concerned is places where fundamentals maybe are less aligned with this particular rally. And I think if you look across Asia, for example, Japan is perhaps looking a little bit more substantive, whereas China still has, although there's a lot of money flow and a lot of investors moving into China, particularly households, there's still some concerns about the economic conditions. So I think for those particular markets where some of the economic conditions have lagged, the question is just, is this sort of a catch-up to what we've seen already in the U.S., or is this something that could be temporary that, could revert back to fundamentals should those fundamentals not hold up for those particular markets?
Katy, great to chat. Thank you so much for your insights. Katy Kaminski is Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. Now, Treasury Secretary Scott Bessent says it was President Trump's unique idea to allow Nvidia and AMD to resume lower-end chip sales to China while paying a 15% cut to the U.S. He told us the deal could also serve as a model for others in the future.
The president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And, I think that this is a very unique solution, allows Nvidia to expand into China. It can make Nvidia chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to Nvidia and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. right? So we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H20 and use our domestic champions. Is this something you might discuss with your counterpart?
Sure, we can discuss that, but it also tells me that they are worried about the Nvidia chips becoming the standard in China. Look, Nvidia is an incredible product. A lot of the technology in China is, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the Nvidia, Jensen Huang just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the oval.
No, not at all. Because where we got was with this unfettered trade, we did not have secure trade or fair trade, and so now we are trying to make it secure. So you don't want to. We're not sending out the highest level chips, and we don't want to sell everything to everybody. So there is a need for intervention.
U.S. Treasury Secretary Scott Bessent there speaking to Bloomberg's Jonathan Ferro and Anne-Marie Hordern. Let's take a look at some of the stocks that have been reporting in Australia today. It is, of course, earnings season. Westpac Bank, one of the so-called Big Four banks here in Australia, having a pretty good morning, up 6.25% at the moment. This is after third quarter profit rose 5.6% to $1.2 billion, supported by strong business lending. The net interest margin also widening there. A bit of a reversal of fortunes from what we saw for the biggest bank, Commonwealth, yesterday. Meanwhile, ASX, the company that runs the share register here in Australia, losing a bit of ground here, signalling that costs are going to rise this year as mounting regulatory scrutiny weighs on the index. So total expenses seen growing there, ASX off by close to 1%. Big bump for Origin Energy. This is one of the major electricity suppliers here, electricity and gas, of course, coming in with a reporting in line, 1.5 billion Aussie dollars. That's up 26% with a 30-cent dividend. And Telstra there at the bottom of your screen, telecommunications company. Net income up 34% to 2.17 billion Aussie. That was a narrow miss. Also, though, going to be an additional share buyback of up to 1 billion Australian dollars. The timing of that, though, dependent on market conditions. Telstra off about 2.8%. More to come on the Asia trade. This is Bloomberg. Well, President Trump has warned that Russia will face consequences if Vladimir Putin does not agree to a ceasefire with Ukraine in the coming days.
Yes, they will. Yeah.
What will those consequences
there will be consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
That warning came after Trump spoke with European leaders ahead of his Friday summit with Putin. Bloomberg's Michael Heath is following this story for us. So, Michael, severe consequences. I guess one question is, what could they be? And aligned to that, what's Vladimir Putin likely to put on the table here?
Yeah, Paul, I mean, the US is sort of, they've had this legislation, to put on additional tariffs on Russia. And I guess we saw a bit of a foretaste of it with the secondary sanctions on India over its purchases of Russian oil. So trying to shut down that the oil industry, not the oil industry, the oil exports, that's the flow of revenue for Russia. I mean, you imagine that would be the focus point, and that's where you really are going to hurt Russia, because the elite makes a lot of its money there, and obviously the budget is heavily supported by that. And as for Vladimir Putin, I guess his question is, is President Trump bluffing. He has made plenty of threats in the past, though it would look pretty awkward if nothing came out of this and the US then responded with no action. So you suspect the US would do something. With Putin, it's just a matter of, what is he willing to give up? Does he think he can drag this out? How strong is the resolve with the Europeans and the US? As you mentioned, that call, the US call with the European leaders talking with President Trump, that was very important because just to reinforce to Trump not to do any deals without Ukraine being around and to keep sort of a show of solidarity there, because Putin is always waiting for the West to fracture.
Also makes you wonder how both Trump and Putin will engage with each other at this really high-stakes meeting. What do we know about the way that the dynamics might play out between the two leaders?
Yeah, Avril, we have sort of seen it before, when they had this meeting in Helsinki during Trump's first term, which is a disaster for Trump. He thought it had been a really great meeting, and obviously from externally it looked like he just gave away everything to Vladimir Putin when he took the Russian president's version of events over his own security services kind of thing. But basically there's an interesting little take on Bloomberg on this, looking at this Putin as the former KGB agent against Trump with the art of the deal. And there's elements of truth to that, but it's important to remember when we talk about Putin, the KGB agent, that he was a pretty low-level functionary there. The KGB had a big reputation for good reasons, but he was never a senior figure or an important person there. It's more just a brand that he uses in many respects. One thing you do notice with Putin is he doesn't talk a lot, and this is I guess, if you go back into Russian history, Joseph Stalin was the classic of this. Stalin was obviously much better educated, much smarter than Putin, but you allow people to put a lot of their thinking on you if you say nothing in response. So he's probably going to let Trump do the talking, and Trump does like to talk. So his thinking probably would be that he gets Trump to end up giving him more than he even asked for. But we really have to see how it plays out, because I think they both talk a good game in terms of their negotiating skills. How good they actually are, I think, is a bit of a different question.
Well, Bloomberg's had a wide-ranging interview with the US Treasury Secretary Scott Bessent today, touched on a bunch of subjects, including this, and he said that Europe really needs to start getting on board with these sanctions against countries that buy Russian oil. Looking at China, put up or shut up were his exact words. What are the chances of this happening?
Well, it's a bit unusual, isn't it? Because under President Biden, the US put on a lot of sanctions, Europe's put on a lot of sanctions, and this secondary sanction idea is reasonably new. The Biden administration was worried about disrupting the energy market. The Trump administration seems more gung-ho on it, which is probably the right way to go. I suspect if the US does go that route, Europe will follow. And it's a little bit surprising to say that, because Europe has been pretty strong on Ukraine. Even, it's very hard. It's hurting cats to get Europe to unite on stuff, and they've done a pretty good job on this. So I think if the US does take the lead, Europe would end up following there. And the US hasn't done this to China yet too, so we really need to see whether that step actually happens.
All right, Bloomberg's Michael Heath there. We have more ahead on the Asia Trade. This is Bloomberg.
And we're unpacking some of these earnings as well. Tencent reported a 15% revenue jump in the last quarter, driven by double-digit growth in most major business segments, including advertising, which it attributed to AI-driven enhancements. Let's bring in our China correspondent, Min Lo. So, Min, what were some of the key takeaways from these earnings?
Yes, there is a lot of expectations drumming up to the market open in China right now, because overnight after the earnings call, we saw Tencent's ADRs in the US jump by about 8% or so. So we're set for a very strong open. Possibly prices could surge above 600 Hong Kong dollars for the first time in a long time. And that's because we saw a very solid earnings in the second quarter. Revenue beat estimates by at least 3 percentage points. And its earnings as well, net income came in at 17%, which was also better than expected. We saw an improve in its margins overall across all segments, thanks to the AI integration into its advertising, which really improved targeting and click-through rates. So that bode well for the advertising revenue. And when it comes to earnings as well, there is a strong pipeline of games, and the existing games were also attracting a significant number of new users. But investors are most focused focused on AI spending. There's, of course, a lot of concern about what happens next, given the Chinese government's directive recently telling companies to not use Nvidia's AI chips for sensitive projects. We didn't get a lot of information or guidance from Tencent about whether or not it's going to, stop buying Nvidia's chips, but we do know Tencent has enough chips in its stockpile for its needs for now. But spending in AI was up 150% in the second quarter, and the Tencent president is saying that they are going to be quite cautious about their AI spending going forward. They're not going to spend lavishly on marketing or hiring aggressively for AI, given that there is still a lot of unrealized monetization potential for AI at this point. So they're still focusing on integrating AI into their existing suite of services. But overall, given the backdrop of these tariffs and geopolitical headwinds, it shows that the company is still moving in the right direction, especially given there were a lot of expectations that earnings this year was going to start to normalize.
Well, we're going to hear from JD.com later on today as well. What should we be looking out for?
Yeah, it's a very different picture for JD.com because JD has just made its foray into the food delivery business, which is a space that is very dominated by two other players, Meituan and Ele.me. And so there has been this very intense price war that has been going on for many weeks. The company is spending a lot of money to pump into promotions and subsidies. So all of that spending is expected to hit its profits quite significantly this time. The earnings per share expected to fall by 50% in the second quarter, the first time in about 3 years that we're seeing that kind of numbers. And this profit hit is expected to extend until the end of the year, given this increased expenditure is expected to continue with JD.com looking to invest in more centralized kitchen or supply chain related sort of infrastructure, and also the cost incurred from its overseas expansion as well. But of course, we still have the government subsidies when it comes to the equipment upgrading program, for example. That would help lift its retail sales revenue, and the improved margins there could help offer a little bit of relief for JD.com.
All right, Bloomberg's China correspondent Min Lo there. Let's get the latest now on the corporate front. Shares of cloud computing provider CoreWeave tumbled after it reported a quarterly loss 20 times bigger than last year's. Its third quarter operating income forecast of up to $190 million, also underwhelming investors after a near quadrupling of its share price since its March debut. The results raising concerns that a rapid AI data center expansion is pressuring profit margins. Amazon, meanwhile, plans to offer same-day grocery delivery in 2,300 cities by the end of the year, more than doubling the current number. It says customers will be able to order perishable items alongside frozen foods and household goods. The same-day grocery delivery service will be free in most cities for Amazon Prime subscribers on orders more than $25. More ahead on the Asia Trade. This is Bloomberg.
I'll be naming a new chairman sometime within the next, I think I'll name it a little bit early, the new chairman. I'm down to 3 or 4 names, all good, all great.
President Trump there on his search for a successor to Fed Chair Jerome Powell. Let's take a look at how bonds are tracking around the Asia Pacific at the moment. We did, of course, see a very weak auction for the 5-year JGB, and so drawing the weakest demand ratio since 2020. We had Japanese 10-year bonds also raising their earlier gains. Different story, though, for Aussie and China 10-year benchmarks. Some work by Bloomberg also suggests that Japanese bonds are going to fall further behind global peers as inflation, quantitative tightening and fiscal uncertainty all ensure an upside bias for yields. Avril.
Indeed, Paul, and we also have the GDP print out of Japan tomorrow. So the worry is that that further fans these stagflation fears in the country, putting further pressure on Japanese bonds. That being said, given how U.S. yields have been trending, that's expected to be good for the Japanese currency. We are indeed seeing that firmness. Dollar-yen now below the 147 handle. Worth noting that the Treasury Secretary Scott Bessent did say he talked to the BOJ governor, and he has been urging Japan to deal with inflation. We are watching out as well, given how Scott Bessent has talked about this need for the Fed to begin a cycle of deep interest rate cuts. He told us that the current central bank leadership has been taking too much of an old-fashioned approach to monetary policy.
President Trump is very good at giving these nicknames, and I think the reason that the Jay Powell gets the nickname too late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward-thinking. They try to be more data-driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, you know, it's just very old-fashioned thinking, but I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September, does that signal that the economy, though, is not doing well?
That signals that there's an adjustment and the rates are too constrictive. You know, if you look at any model, that we should probably be 150, 175 basis points lower. So, you know, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board, and that she was very, very political, I believe. And I think that
what did she do that gave you that impression? I'd love to know.
Sorry?
I imagine you're referring to Governor Kugler. What did she do that gave you that impression?
I think there's a lot of inside baseball. And look, Governor Kugler, you read what she was saying when Kamala Harris was running, that we needed rate cuts, we needed this, we got to foam the runway, and then all of a sudden, it was hard to know whether, you know, TDS was a Trump dementia syndrome, or Trump derangement syndrome, or tariff derangement syndrome.
You get the opportunity to remake the Federal Reserve. The president gets the opportunity to remodel, reshape the Federal Reserve. And I'm not talking about the remodeling that maybe the current chairman's going through. We'll talk about that another time. I want to talk about the complexion and character of the committee. The changes that you're making at the moment. Stephen Myron, let's start with Stephen. How quickly can you get Myron confirmed?
We'll see. The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting. And Jonathan, the president's concerned about the building and those massive cost overrun, which just tell you that there is no accountability at that organization. There's no oversight in terms of the spending, but the president and I are both concerned about the foundations of the Fed.
U.S. Treasury Secretary Scott Bessent speaking to Bloomberg's Anne-Marie Hordern and Jonathan Farrow. More ahead on the Asia trade. This is Bloomberg.
Hon Hai reports quarterly results later today, with analysts expecting net income growth of just 3%. And that's on volatile iPhone demand and forex losses from a strengthening Taiwan dollar. Our earnings specialist Rachel Yeo joins us now. So, Rachel, a lot of headwinds here for Hon Hai and these numbers.
Yeah, so we're expecting to see just modest growth in terms of net income for June quarter earnings. And much of the slower growth, as you've mentioned, is also impacted by volatile iPhone demand and also strengthening foreign exchange losses stemming from strengthening Taiwan dollar. And this has also been impacting other companies across Taiwan in the earnings season this time. And in terms of Hon Hai's segments, so its cloud and networking segment remains the key growth for Hon Hai this quarter. This is also supported by robust AI server demand, as well as the continuing ramp up of systems with Nvidia's GB200 GPUs. And in the meantime, consumer electronics and also computing segments, the revenue for that could remain more subdued, which also reflects weaker consumer demand and also slowing order momentum. But in the long run, just like a lot of the major tech companies, AI will continue to be the forefront of Hon Hai's growth in the long term as well.
What about concerns for Hon Hai related to U.S. tariffs? What are you watching out for on those risks?
Yeah, so earlier on, Hon Hai had reported July sales, and sales growth had been the slowest since January. So this also signals that the firm is also seeing signs of tariff-induced uncertainties impacting electronics demand. And furthermore, Donald Trump's planned 100% chips tariff could add further concerns for the firm as well. But in terms of the long-term trajectory, I believe that Hon Hai is still looking pretty optimistic for now, as it's seeking to expand its AI operations in the US. Given that Hon Hai is a big Nvidia partner, Nvidia earlier on had also highlighted plans to produce as much as $500 billion worth of AI infrastructure in the US over the next few years, and they are planning to work with their various manufacturing partners, including Hon Hai. So this could be good news for the firm in the long run as well. And earlier on, Hon Hai had sold its Ohio electric vehicle facility. So this also signals that the company is shifting strategically in its North American businesses to focus more towards AI data centers.
All right, Bloomberg's Rachel Yeo there. In other news, a Chinese company is suing Applied Materials, accusing the U.S. chip equipment supplier of stealing trade secrets. Beijing E-Town Semiconductor filed the suit in a Chinese intellectual property court, alleging Applied Materials poached 2 staff with knowledge of proprietary plasma technology and then later filed a related patent. E-Town is seeking about $14 million in compensation. Avril.
Yeah, let's take a look at how Asia markets are faring. It's really the undercurrent from these firm bets that the Federal Reserve is going to go for that 25 basis point cut at its next meeting in September. But don't forget, we still have at least another inflation reading, a jobs report, and then Jackson Hole to digest before we actually get to that September central bank gathering. For the moment, we're seeing Asia stocks mostly mixed at the point. At this point, we're seeing the Asics bouncing back from the declines of a day ago. Nikkei is trending lower, and this is coming against the backdrop of that firmness we're seeing on the U.S., the Japanese currency, I should say. Now, we're also unpacking earnings as Indonesia's GoTo Group notched a 4th consecutive quarter of adjusted profit. It's the latest sign that the ride-hailing, food delivery, and fintech company is making progress with reining in expenses and boosting revenue amid stiff competition. Joining us exclusively is GoTo Group CFO Simon Ho. Simon, great to have you with us. So what were the main drivers, you think, in this recent quarter, and what will the focus be in the next?
Look, we had a great quarter. As you mentioned, it's the 4th consecutive quarter of positive adjusted EBITDA. You know, most of our metrics reached record highs in the quarter. Both of our core businesses, on-demand services and also fintech, reached the best ever adjusted EBITDA levels. What's driving this growth, I think, is a couple of things. One is our ecosystem is working, right? We have, fintech and also on-demand services providing plenty of day-to-day use cases for customers and users. And on top of that, we've also continued to invest in technology. And during the quarter, we also announced that we completed a very complex cloud migration project, which will make our technology infrastructure much more efficient, leaner, and also cheaper at the same time. So technology is going to drive a lot of what we're doing going forward. The strategy, product, innovation is going to be very critical. Both businesses continue to grow well. Fintech, just to throw out a few figures, monthly transacting users were up about 30% year on year, and the loan book continued to scale in a very quality way. We're at about 400 million in loan outstanding. On-demand services recorded solid growth, as over there we have a strategy to focus on expanding the mass market, growing through the mass market, and also focusing to service on the premium customers as well.
What is the goal then to hit positive net income? Is there a timeline that you have in mind?
Look, we haven't announced any timelines on positive net income, but clearly we don't think it's too far away. Actually, during the quarter, beyond adjusted EBITDA that we've had positive for several quarters, group EBITDA was also positive, operating profit was also positive, operating cash flow was also positive. So I think we're making very, very positive progress towards net income positive.
You do, of course, face some very intense competition in the areas that you operate in. How is aggressive pricing, promotions weighing on margin and profitability?
Yeah, look, I mean, on-demand services, fintech, all these businesses are competitive. We have plenty of, capable competitors that we have to compete with. So far, I think so good. We have seen a bit of an uptick in competitive intensity in the market during the quarter. We have obviously made our response. Our goal is to be able to protect our market share and at the same time improve profitability. I think going forward, a lot of what I discussed earlier is going to be critical, right? Being able to improve our technology, being able to drive ecosystem synergies, because we are, at the end of the day, a local Indonesian company, and we know Indonesia the best at the end of the day. And Indonesia long-term still has significant growth potential. These digital services are still tremendously underpenetrated. So I think the opportunity is there. The way we're going to win and unlock this has to be through, disciplined operational excellence, strong technology, having good people, world-class talent. I think all these are going to be critical ingredients in order to be successful in the long run.
What's your view on potential consolidation in Indonesia's rideshare market? Is that more of a question of when rather than if?
Look, our focus ourselves is on organic growth. We have a very clear strategy, right, and a differentiated strategy compared to other players in this space. We're not just a rideshare on-demand services platform, right? We have actually a fast-growing and very successful fintech business integrated as well into our ecosystem. So, look, I think our core focus is going to be on organic growth.
The last time we spoke to you, I think you alluded to how you couldn't really comment on some of the market speculation. Has anything changed since then? Is there any engagement with Grab, potentially?
Yes, look, yeah, sure. I'm aware of, obviously, those market speculations. We have made numerous disclosures, announcements on the Indonesia Stock Exchange. So, those are all public. So I would refer to you to take a look at those. There's nothing new beyond those.
Okay, you talk about the strength of financial services. I think you have a goal of hitting 8 trillion rupiah for your loan book. Can you talk us through the strategy, exactly how you're going to get there?
Sure. Look, our loan book size currently is about $400 million. Our target by the end of the year is to be at about $500 million. So it continues to grow at a very healthy rate. Over the last quarter, it was up 15%, year on year up 90%. So it's scaling nicely. Now, I think one of the core components or the drivers of the growth in the loan book is actually growth of users in our ecosystem. Because we currently lend within our ecosystem users. So the idea is people come into our ecosystem, they make transactions on whether it's on-demand services or payments. We have the data, we can understand the user well and also extend credit and therefore manage credit risks at the same time. Now, one of the big growth drivers in the next couple of years and going forward is going to be our consumer payments business, GoPay. GoPay, as I mentioned, monthly transacting users already growing at 30% year on year. We're at the fintech business has over 20 million monthly transacting users, and we expect that to continue to grow strongly. And as a result, we will then be able to cross-sell more services in our ecosystem to these users, and one of them is, of course, lending. So I think that's a very core part of our strategy, is also to grow the payments business, which will feed into our ecosystem, and also lending.
Yeah, I mean, as you say, organic growth really informing a lot of your strategy here. But I'm just wondering, you must have some good insights into consumer behavior in the markets that you operate. Have you noticed any changes there?
There hasn't been consumer behavior in Indonesia. There hasn't been significant change this year. But if you look at the macro indicators, there has been clearly some softening. And we have also obviously felt that in our business as well. But we're managing it well. Our business overall has, I think, natural resilience against sort of severe economic cycles, because if you look at the services that we provide and people use, they are really part of their daily lives, whether it's taking a ride to school, to work, right, making a payment, paying your bills. So a lot of those are really actually quite resilient to the economic conditions, so I think we're generally well positioned in that sense.
Yeah, and as you mentioned earlier, for the company, it's the strategy about technological innovation in a way to compete. But I wonder, given how aggressive your competitor has been on promotional campaigns, as Paul alluded to earlier, what do you think is the potential in competing in pricing strategy? Is that something that you're taking a closer look on?
Look, I think pricing obviously is an important component, but the way to achieve, I think, competitive pricing is going to be, or rather a competitive advantage at the end of the day is going back to the fundamentals, which is, look, we have to drive our unit costs down. We have to drive cost efficiency, provide obviously a good service, a good user experience, whether that means, to some people, they want something fast, they want it on time, right? And all of that requires a lot of product innovation and technology to make it work. And also providing that user experience also means providing targeted, personalized experiences, right? Again, these are enabled by technology. So that's sort of our North Star. That's how we think about how we build our business, as opposed to, we have to just lower our margins, lower our pricing.
Yep. All right, Simon Ho, thank you so much for joining us today. Simon Ho there, the GoTo Group CFO. We have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at how some key commodities are faring against the backdrop of the Fed rate cut bets, lower interest rates. Gold continues to do well. 33.70 is where you're looking at the precious metal. We're also seeing a continued climb in oil prices towards the 63 handle on U.S. crude futures and towards 66 on Brent. Paul.
Let's get to some other stories that we're following as well. China sanctioning 2 EU banks, fulfilling a promise to retaliate after the bloc targeted some Chinese lenders over Russia's invasion of Ukraine. It's a largely symbolic move, as both Lithuanian banks say they have no operations in China. The Ministry of Commerce says it hopes the EU will correct its wrongdoing and stop harming China's interests. The U.S. appeals court says the Trump administration can block billions of dollars in foreign aid already approved by Congress for distribution. It's a win for Trump's push to withhold USAID funds and dissolve the agency. Separately, a Maryland federal judge has rejected the Trump administration's attempt to throw out a lawsuit that accuses Elon Musk of unlawfully directing the closure of USAID. Avril.
Yeah, Paul, let's take a look at how some of these Asia stocks are faring. I mean, we have been seeing a really solid run on the region's benchmark, and this is getting fueled by the easing of trade tensions and, of course, more recently, what investors expect the Federal Reserve to do. But as we've been discussing the whole of this show, there is a distinction between what politicians are perhaps urging for and what Fed speakers have been suggesting on the path of the rate, the trajectory from the U.S. Central Bank. For the moment, though, we are seeing a sort of fueling in risk appetite, particularly on the EMs. But taking a look at Japan and South Korea, it is a down day. And I think this, for the Japanese benchmark, is snapping a 6-session winning streak. And this is against the backdrop of the firmness you're seeing in the yen. Paul.
Well, let's take a look at how futures are shaping up ahead of the open in China, Hong Kong and Taiwan at the bottom of the hour. It's looking like a risk-on day in China. Things are a bit softer in Taiwan. One stock to watch, Tencent. We saw ADRs jumping 7.4%. Strong set of numbers for Tencent. Sales growing at the fastest pace in 4 years. We've got S&P futures looking kind of flat at the moment, although we did see a pretty solid rally for US stocks in the previous session. Okay, also looking at a black rain warning in Hong Kong as tropical storm Pudol passes to the northeast of the city, so take your umbrella to work if you're in Hong Kong today. That is it for the Asia Trade. Markets coverage continues in a moment.